Good morning, dear traders. You're watching a recap of the Asian session. On Friday, the US stock market declined sharply in the last few hours before closing. Today's stocks are trading mixed. The Nikkei 225 lost about 2.14%, while the S&P ASX 200 added 0.37%. The latter keeps moving up. The US stocks reversed downwards last week after the release of inflation data. The equity market had been dropping for 2 consecutive sessions. Consumer prices hit the highest level in 4 decades. Analysts are afraid that inflation may climb even higher. The S&P 500 index slid down by 1.9% at Friday's close. Today's futures have already risen by 0.16%. As usual, the US dollar index took advantage of the stock market weakness. It climbed above 96 against its main rivals. On the chart, the greenback holds firmly at this level. What's more, the Fed is going to hold a closed meeting today. Its results may fuel demand for the US dollar. Fed policymakers are sure to discuss rate hikes, so the greenback, which is currently trading at 96.08, may jump to new highs after the meeting. It's expected to stay in the range of 95.07–96.30 today, with the possibility of a further rise. It's hard to predict which levels the US dollar may approach within an upward movement. However, the yen is still stronger than the greenback. Last week it lost ground due to mixed data on the stock market and the flat movement of the US dollar index. However, on Friday it asserted strength against the US dollar, gaining 0.54%. Its growth was facilitated by a drop in the US market and an increase of 1.77% in gold. Yet, during the Asian session, the yen's trajectory was again rather unclear. On the 4-hour chart, the price broke out of the upward channel and even dropped to 115.30. Shortly after it regained ground, the curve approached the 115.31 mark, but it still pointed downwards. On top of that, the pair is moving contrary to technical indicator signals. It may be the first sign of the upcoming downward trend. Analysts believe that the price may fall to 113.33. This scenario is likely to occur as bears are slowly but surely taking control. Now the pair is trading in the range 115.20–115.60. The Aussie lost 30 pips following the strengthening of the greenback on Friday. Today, the US dollar index keeps growing against its counterparts. The pair is now in the red zone, dropping to the level of 0.7115. The Marlin oscillator made an attempt to perform an upward reversal, but it only touched the upper limit of the downward channel. The pair is likely to move away from the range of 0.7113–0.7152. The first target level is located at the midline of 0.7065. The Aussie may be hovering at this level for some time before resuming decline to 0.6950. This is all for today. Have a productive and profitable week, and we also wish you happy Valentine's Day. May love and happiness be always in your life, and see you back tomorrow.